What is up, my dudes and my girls? Looks like we've got the end of the weekend fast approaching here. We are in the final 18 minutes of the Sunday candle. And what a weekend it has been. Check it out. So, weekend low, 26,578. Weekend high, which could, we'll see, could punch higher, but $28,390.10. An $1,800 weekend. That's a tall range that we haven't seen a weekend pull in quite a while, so that's cool. That is very cool. What is up, Sean? What is up, DC Woodworking? Mike Allen, Gianluca, OG Alchemist, what's up? Yo, dude, no way you're live. I'm gonna put DOGE in my bubble pop cluster. I'm using IOTA, Atom, and Qtum 1 min. MSJS, how you doing? What's going on, guys? So, I haven't really done any brand new analysis in the last 48 hours. It's been pretty much just watching the trend, but I think today I'm just gonna try and break down and see what is what, put all bias aside and just read the chart and see what we're dealing with. So to do that, let me just open up a brand new fresh Bitcoin chart, probably the Bitcoin index chart, because that has the most history, and I don't think I've drawn on it yet. I think it's just all fresh. Yeah, let's just even remove drawings to completely freshen it up. Yeah, okay, we've only got the candles and the indicators. All right, so let's go out to say the monthly, because we know this chart has the most history for Bitcoin on it. Let's go logarithmic. We've had a solid 3 months. I mean, February was a bit of a doji month. Not a great deal of candle body at all. It was a complete doji month. Okay, February opened at 23,134. And it closed at 23,136. That's how much of a doji February was. Very much just indecision, It was kind of like a rest month. You could have, basically built up a position during February, during that time. So that's pretty cool. So looking at this chart zoomed out in this fashion, does this look anything similar to what has happened in the past? And I would say, yeah, there's a couple of moments in history here that look reminiscent of what has just happened. So if we go from, this high here, this was at one point an all-time high. It produced a crash and then this rounding bottom with a recovery. Same here, an all-time high, a crash, and then a rounding bottom with a recovery. Even here, there was some kind of all-time high, a crash, and if we zoomed in, I mean, it all happened quite rapidly. On this one, there wasn't as much of a drawn-out rounding bottom, but you could argue it's still there. It's just on a shorter time frame. So it's this hook kind of thing that's happening. And then if we take this and copy it over, so this one to here, I mean, does that kind of marry up? Does that kind of fit? Yeah, it kind of fits. Is the timing kind of in sequence? Does it seem to time up? Yeah, if you're like a fractal, it's not perfect. It's not like a perfect, but it echoes, like it rhymes to a degree, right? So that's optimistic, I think. I think maybe we're on the precipice, or we're on the cusp of seeing, you know, that's how we come out of these things. We start up a bull run. Like, this is how it begins. At least if history is anything to go by, this is how bull runs begin. Like, you see a really big drop from an all-time high. You see it stabilize out. Everyone's bearish. Everyone's saying sell. Everyone's capitulating. You know, it seems hopeless. It seems totally hopeless. And then all of a sudden, you know, a month passes, you know, blink and you miss it. Things start picking back up again. Anyway, for those who didn't know, this week is a big week. We've got the funds rate decision. The Federal Reserve put out, you know, what they're deciding to do with the interest rates. The biggest, or the most likely two options here that we have are either a pause to the interest rate, so no hiking, no like increasing of the rate, or an increase of 25 basis points, so 0.25% increase. The more popular sort of outcome of those two at the moment, the consensus is that most people are thinking 25 basis point hike, you know. We know the last CPI figure that came out was 6%, so that's a move in the right direction. So we see inflation coming down, so that's good. So yeah, that's what's coming up. So let's get off logarithmic. Let's just go back to linear. This is the linear chart, and we're on the weekly now. Let me just bring up some oscillators. Okay, we go. Let's use these ones. Okay. So from an oscillating perspective, on the weekly, so this is quite a high time frame, the weekly. Let's go monthly. Let's start with monthly just to have a look. You can see definitely the histogram bars basically drew out a pivot. You can see the histogram started moving in the opposite direction, basically depicting some kind of a bottom. And now we're on a monthly. This is the monthly chart. So we are starting to curl back up. We haven't even crossed yet on the monthly MACD. But it's fast approaching. Like, if I go full screen, like look, this blue line here has to cross up and over this orange line. So this is the MACD. The blue line is the MACD, the orange line is the signal line. So when the MACD crosses that signal line, that is like a big signal, especially on the monthly, especially when it's crossing after being below the histogram like this. So awesome setup. What's it telling us on the weekly chart? Okay, we crossed all the way back here, and we're still below the histogram. We've only just recently popped up over the histogram. We've got a nice solid week of performance that we've just pulled in. What is there like, according to the weekly time frame, let's go. We've got 9.5 minutes left of this week. And what a hell of a week it's been. I think it's been the most explosive week of the year so far. Without a doubt, it's the biggest week we've had this year so far. Just to give you a comparison, one of the early weeks in January, so the week starting on the 9th of January, Bitcoin did a move from basically open to close of $3,745. And then this week, it's gone to right now 5,900, and you know, we got 9 minutes left. Who knows, maybe we get that final little push to get us $6,000, but to round that off, pretty much a $6,000 week that we've just come out of, or that we're just closing now. That is akin to the kind of weeks we got in the bull run, like in the early parts of the bull run here. Look, you know, that's similar performance, similar kind of power and energy. There's no doubt about it. This is a bull trend, very much so. Could it be the start of the bull market? Yes, it could. Has the halvening happened yet? No, it has not yet. Does it have to happen to start a bull market? No, it doesn't have to. There's no rule. It'll just start when it starts, really. The halving's a nice narrative, like to help, you know, push it along the way. But I mean, if you take the other halvings, I think I've got a chart that has the other halvings on it. Let me just check. Maybe my Bitstamp chart. Let me just try to dig it out from my old lists here. Where's my Bitstamp chart? It's Binance, there's Bitstamp. Okay, does this have anything on it? No. Damn. Okay. My BLX? Does it? No, okay, never mind. Anyway, we had a like the most recent halving that we had was somewhere after the COVID dip. It was like in May, somewhere in May. I'm just gonna say it's like roughly somewhere in here, right? That was the last time we had a halving. Let me just nail the date for you. Bitcoin halvings. And then we can sort of see, okay, the first Bitcoin halving occurred on the 28th of November of 2012. The 28th of November 2012. Will the chart go back that far? Yes, it will. Okay. So November 2012 and the 28th. There it is. Okay. Wednesday. It happened on a Wednesday, my dudes. So let me just fix up this as well. So we got style, time label. Okay, just so we can see it down there. Wednesday, the 28th of November 2012. You can see, okay, was there a bull trend already in play before the halvening? And I would argue, yeah, most definitely. There was already some kind of uptrend happening before the first halving. So there goes the theory that you need a halving to have a bull trend or a bull market. That is bullshit. You don't need a halving to have a bull market. The halving can happen in the midst of a bull market. It's a good reason for continuation of a bull market, but by no means does it need it to have the start of one. You know what I mean? So, where was the next one? Where was the next one? What are we calling the next halving? Bitcoin halving dates. I'll put. Just got to find out when they were. Okay, July 6, 2016. July 6. Right there. Okay. Which was a Wednesday. Wednesday, 6th of July, 2016. It is Wednesday, my dudes. Again, another halving. Now, was a bull market already in play? Yes, it was. Like, look. Highs. So we had a high, a higher low, a higher high, all before the halving. You know, we had a double bottom bear market. So it was we established a support in 2015. We rallied up, you know, chopped sideways, retested that same level. Very strong support at that level, and then bang, the bull market, like, you know, we got above this high. The structure was there, like before the halving, well before the halving started. There was already a bull trend, arguably a bull market in play. And then, you know, there's the most recent one, so which was May 11, 2020. I wonder what day that fell on. It'd be funny if it was Wednesday. May 11, Monday. Okay, it was a Monday. There goes the combination. May 11, 2020. So as you can see, they kind of happen equal spacing apart. Not perfectly, but you can see the next one's going to happen somewhere out here in... oh, it's actually... Actually, I think the spacing might be a little off this time. Anyway, it's basically forecast to happen early 2024. So that date, we won't know it perfectly until it happens, the halving, because it's based off, you know, the block being mined, like the specific or the next block starting, you know, to where it, like what is the parameter for the halving, you know. Just to get a bit of a an answer to that, the next Bitcoin halving is scheduled to take place in 2024 at block 840,000. On April the 8th, 2024, the Bitcoin block reward is scheduled to drop from 6.25 Bitcoin per block to 3.125 Bitcoin per block, making it basically, you know, playing into its scarcity. You know, it becomes more scarce, I suppose you could say. Now let's dive back into a bit more of the short term. So we know that the halvings... Oh yeah, one more thing. Did this bull market kind of kick off before the halving? And arguably, yeah. However, we had a black swan event. We had this COVID-19 outbreak. All markets globally fell in that instance. So had that not have happened, you can sort of see what Bitcoin was trying to do. It was, you know, it had formed a low, it had formed a high, it had formed a higher low, and then we had started to rally here before bang, it got stopped in its tracks, and then that's where the COVID outbreak happened. But had that not have happened in the market, perhaps it would have been something more like sort of like that, you know, just chopping, trying to build momentum and then cause a new high, which arguably would have been, you know, the bull market, you know, had started at that point. So technically, like, yeah, you could argue that that's a higher low still. Even the COVID low was a higher low than back here. So yeah, I think it still qualifies. So anyway, as you can see, a halvening isn't the be-all end-all answer to a bull market. You don't have to have the halvening for a bull market to have started already. So with that being said, the whole point is we may be in a bull market already. And I'll trace it out for you. So this is the lowest point we achieved. The bears pushed it as low as this, and we've come up. I mean, you can trace it out how you like, but this is sort of like a popular sort of pathway. Now this pullback was kind of scary because it broke market structure. It broke character. We got lower than the previous low here. And then, you know, we got back on track. We changed character again back to the upside. So there's 10 o'clock, by the way. So that's the end of the weekly. We've started a brand new day, a brand new week as well. Welcome to the Monday candle. But yeah, like it was a rocky, like this was very confusing for me. Like seeing it dip below 20, it was like, oh shit, okay. Maybe this was just a relief rally. You know, I was starting to think like that, but then, you know, just the way it's come up in the last like week or two, like week and a half, whatever it's been, has basically solidified what this trend was to begin with, you know, this uptrend, this bull trend. So yeah, looking good. Anyway, let's go back to the weekly and see how it closed out. So we had a $5,800 week. Not bad at all. I don't know why this week has started down here. Did something happen in the last few moments? Or are they discounting this pullback candle? I don't know. There's been no real gap up or down. Let's go back down to the minute chart. Okay, there was a bit of a pullback. So now I can go back to this chart because we've got the macro outlook sorted. We'll go back down to say like the 1 hour. I'm just going to work my way down. Okay, so there was a little bit of dip below 28,000 just before the bell there, or just before the close of the weekend. But look, we're trying to establish some kind of rhythm above 28,000, some kind of support. So far, it is just ranging at around 28. Let's see what the oscillators are doing. So we'll go back to the oscillators because we were looking at those. This is the monthly chart. We know that the stochastic RSI is poised to be shooting up on the monthly. It's only just recently popped up after being below it all last year. All last year we spent below, oversold on the stochastic RSI, basically. Now from a weekly perspective as well, okay, we've already hit oversold area, or like, a hot kind of temperature with the RSI there, stochastic. The standard RSI has got still room to move, like it has not gone overbought yet. So there's still room there. We've recently actually crossed up. Have you seen that on the weekly stochastic as well? So we crossed down, played around a bit here, and now we've crossed up again. So it's like this could stay elevated if it needs to. Much the same as what happened back here, like where the stochastic stays up to reflect what's happening on the price. I mean, look how much stochastic activity we had during the bull market. The most recent bull market, there was stochastic coming all the way back down during, what would be relatively small pullbacks. Like, I mean, this wasn't that crazy of a pullback in relation to the rest of the move. So yeah, it can kind of be a bit deceiving, stochastic RSI. So that's why, yeah, it's good not to just look at one indicator in that respect. But down on the daily chart, let's see. Stochastic is hot. No surprise there. We've been ripping for days now. We've been going up, up, up. We've come off the back of all that bearish divergence. Remember that? About a month ago, we were just getting bearish divergence. It was crazy. And then our recent dip below 20, reset that divergence, and everything got back to a natural flow on the RSI. We even went oversold on the daily RSI. That's really cool. Only briefly did we go oversold there. Stochastic crossed up. RSI crossed back into the RSI range. So there were like really good signs for getting back in. And that was during these 2 days here. I remember in a stream I was saying this looks a hell of a lot like a hammer right there. So really nice opportunity to long, and here we are, fighting looking at 28,000, like we've had some action above 28. We're now sort of like slipping a little, but don't be surprised if we do get, a day of like not much action, like a bit of a rest day or even some pullback, because we have been running very hot for like, how many days is it now? 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're not quite 2 weeks green yet, but 9 days straight. Well, some of these days have a rest along the way. 4 days up, 1 day rest, 2 days up, 1 day rest, 1 day up. This could be another rest day. It could turn green too. We'll just have to wait and see. But anyway, by no means does any pullback mean that that's the end of this move. So going back down to like the 4 hour stochastic reset beautifully on the 4 hour chart, and we were able to move up off that. We've had a pretty amazing like previous 12 hours, like 24 hours, Very nice indeed. From here, like what happens from here? Are there any chart patterns that are happening? We just scroll across here. So right here was a beautiful cup formation. However, there was no handle to be had. It's sort of just, if you argue it was a sloped cup like this, and there's your handle, maybe that suffices. But yeah, even still a nice formation anyway. It rounded out beautifully, found support on 24k, back tested 24. Basically a double bottom. And up we go, Thursday, Friday, like I've said many times before, Thursday, Fridays are usually really good for market activity. If you zoom out far enough, we're always in a bull run. Yeah, that's right. Up only, right? But hey, look, I think there's going to be a lot to talk about once we get that funds rate decision. Because that, I believe, as it has done in the past, it causes a lot of volatility in the market and can be the catalyst for some pretty interesting moves. So, obviously we had our CPI day not long ago. What was it, last week? Yeah, last Tuesday. Coming in at 6%, so a nice reduction off the 6.4 prior. So inflation seems to be heading in the right direction, the direction that we want it to head. The funds rate, the estimation, or the forecast is out. They think that we're going to hike by 0.25 basis points. That seems to be the consensus. And look, if you look at the track record, they pretty much get it accurate every time, So you can pretty much count on a 25 basis point hike. So if that is the case, I think the market is pricing in 25 basis points. Like that seems to be what happens is, when you get the forecast, that is what gets baked into the price. The market reacts to the forecast. And then what comes in as actual is basically, what's set in stone, Can there be surprises? Yes. Look, this was the last time we got surprised with a funds rate decision. Back in June, it was really bad because they hiked by 50 basis points. 75 basis points. They went from 1% up to 1.75. Very crazy. And then, a further 75, and then another 75, and 75. And then this one was interesting. They backed off. They're like, oh, let's just do 50. February was, okay, let's just do 25. And then now it's like, okay, let's just do 25. So like it's, that rate of increase has slowed down, which is good. Still an increase though, still a rate hike, which, 5% interest rate is no joke. It must be hard running business like a business and, growing your company in such a harsh interest rate environment. The banks are feeling it. We know that. There's been banks collapsing in the US as we speak. And the Fed has even been, I think, they've been bailing out these banks to try and soften the blow because they caused the damage. The Fed, in a way, they are partly responsible as to why, the conditions are the way they are, is because they've raised the interest rates. And it's not like they did it on a whim. Like, they had to do it to try and fight inflation, right? It's like, it's just a byproduct. It's a symptom of what had to happen. Like, they had to, if you're going to operate on someone, you have to cut them. You have to cut them open. Like, that's the only analogy I can think of. Yes, cutting someone open's not a good thing. It's a bad thing, but it's necessary to fix, the issue, the underlying issue. So, yeah, short-term pain to try and fix a broader or larger issue. And that's what the Fed does. It's just cycles of that, Anyway, enough of that. Let's go back to crypto, Bitcoin. Where are we at? We're sort of dipping below 28. Huge tails on these candles here. This is only the 5-minute chart, so you can't really get much perspective on the 5-minute, but the weekend's over, so I'm going to delete this rectangle. We know how it did. Awesome. Delete it. All right. Now we can just focus on the price action. So Monday candle. Mondays generally aren't that amazing. Lately though, just considering what we're doing lately, maybe it could be, but I think the best action comes on Wednesday, Thursday, Friday. And this week, having the funds rate decision coming up, maybe we just sort of chop sideways until we get that rates decision. But hey, that's all guesswork. It is all guesswork. I'm by no means do I know what's going to happen for sure. Of course, we just have to play it as it comes. Let me just catch up with some of these comments here. Bitcoin's going to 1 million, says Jack. There you go, guys. You heard it here first. Yeah, there's some rumor about 90 days, like that Bitcoin's going to some astronomical price. That's, I guess we'll see. 90 days. In crypto, 90 days is a long time. Has it even been 90 days of 2023 yet? I don't think so. So yeah, maybe. You never know. Here's the 1st of January. Here's today. It's been 78 days, so not quite 90 yet. It's getting there though. Another 12 days and we've got 90 days since the start of the year. Pretty amazing year so far. This year has been incredible. Now, let me just get rid of the key levels here, the price levels. Go full screen on the daily and just look at what we've been through. So this was the Celsius crash right here. See Celsius? Crash. This was the Terra Luna crash right here. This was the FTX crash right here. So we've been through a lot of crap. Last year was disgusting. It was just bad news after bad news. Everyone was extremely pessimistic through this phase here. It was almost illegal to be bullish, or suggest any kind of upside. The way that some people made it seem. But here we are. Look, we've come up. We've smashed through this previous high. So this rectangle right here, that was like just a massive consolidation range, like, and we've popped out of it, out of the top very convincingly. Like, you know, we've had a really violent break up through that. So, you know, and we're holding high for now. So let's see if we can maintain this structure. Now, having said that, what would still be considered healthy for this uptrend? What kind of pullbacks could we be looking at possibly? I think this could pull back and remain bullish. You know, we could even pull under 26,000. And you know, we won't break structure until we get below 20k again. You know, like this is our previous low. If we just take the larger picture, like, you know, here's a low, here's a high, here's the second low, and now we're dealing with the next high. You know, this here, if we pulled back down to like $20,000, that's still considered an uptrend because it's a higher low, right? So I don't think that's going to happen, but you know, that's how deep it can go, and we're still intact. You know, that's what we're dealing with now. But yeah, look, I think a more realistic back test maybe would be like 25.5, something like that. 25.3. Is that gonna happen? Not necessarily. Like, we could continue to rally up from here. Like, you know, we may not have the top yet of this push. You know, we could still be moving up into it. So based off that, let's see if there's any kind of like Fibonacci extension, trend-based fib extension that we can use to try and pull out a target. So if you grab a low like this, you take it to a high and then draw it down to the pullback like that, you get fib extensions. So a 1-to-1 fib extension takes us to $29,323. And then if you go real bullish, like a 1618, that's 35.3k. That's all the way up here. So we've only just recently pushed through the 786 fib extension off that low there, if you're drawing it out like this. There was another way that this was drawn prior to that dump, and that's like this. Or something like that, and maybe using that as the starting point. But even still like that, we've still recently, like the way you cut it, we're still pulling in similar numbers depending how you want to cut this. Like if you want to cut it from down here, then we're still dealing with the 786 fib level here. It just, yeah. See, this is where subjectivity comes into it a little bit, you know. But anyway, that's fib extensions. Let's look at a macro fib. Let's go to like the weekly chart. I'll just hit reset here. Let's take a measure from the all-time high down to the market low of 15,500 or whatever the hell it was, and see what kind of obstacles we have along the way. So where's the lowest point? Right there. What are we dealing with right now? We're dealing with the first Fibonacci level on the way back up right now. 28,100 is the 236 fib level. It's only the first hurdle on the way, guys. We are only just arrived at the first hurdle. From a fib perspective, like if we're taking a macro fib from all-time high, so maybe there is a rejection off it initially. Like maybe that's cause for like a day of retracement. Who knows? Like maybe, we'll see. We're on the weekly time frame. Let's go down to the daily. I mean, look how clean that is. It's almost to the dollar. It's very close. So that fib level there, we're dealing with that first. Let's The next fib will be the 382, which is just under 36k. That kind of coincides with these lows here from last year. But yeah, the lows we're dealing with from the previous sort of cycle are here. So it's a little bit below 30k. It's not quite 30k, it's more like 28.5-ish, something like that. We had a lot of activity off it here too. So yeah, we are approaching, we may not quite be there yet, but we are approaching what seems to be an area, a pretty significant support resistance area or level. And that is somewhere between 28 and 32k, right? There's a lot of traffic we have to deal with. Can we punch straight through it? Yeah, we can. Like, it's been shown in the past that significant resistance can be broken quite quickly, quite rapidly. I mean, look at this. We had support. We had like a support resistance level at around $6,000 through all of 2018, basically. And how did we deal with it in 2019? We crushed it. We just smashed straight through it like it wasn't even a thing, like it wasn't even there. See that? We just rocket through it, not like nothing, like this level didn't exist. So, can that happen again here? Potentially, yeah. Like, because we have a zone here of support resistance, and we are rapidly approaching it. There's no doubt about it. We're not just creeping up to it. You can see how rapid these candles have grown. So there's definitely momentum on the bull side, right? There is some kind of thesis or theory that we could just blast straight through this zone without testing it. If the 186 banks under scrutiny or collapse, that could send Bitcoin skyward. Yeah, I would agree with that, Johnny. If enough people run to the safety of Bitcoin, which is a funny sentence, isn't it? Like, you wouldn't you wouldn't have been saying that back here post FTX. People running to the safety of crypto. That seems like, crazy talk. But now we're talking about it as reality. See how wild crypto is? Like how crazy things can get? Who can remember back to FTX and how terrified everyone was of crypto? You had people running to hardware wallets, like pulling everything off the exchanges. Exchanges that didn't do anything wrong, by the way. Like, they're obviously, naturally, and I don't blame people for putting these exchanges under heavy scrutiny, and so they should. But yeah, they felt the consequences of FTX's failure. Just for existing, like these poor exchanges. Well, they're not poor, they're rich. But yeah, anyway. We're through that chapter. We've closed that chapter. I think it feels like it was a long time ago, but it was only like 3 or 4 months ago, maybe 5 months. But yeah, here we are today. Just let that sink in. We're basically at or above, or basically playing around $28,000, guys. $28,000. There was a point I remember thinking that it was like, how the hell are we ever gonna get back up over 18 even, like back over here? So to have done this in such a short amount of time, it kind of makes you think, what could the next 3 months produce? If this is 3 months now, if this is Q1, what is Q2 gonna bring? And I want to stay realistic and humble to the fact that shit could hit the fan. Like, you know, there's always that potential. There's always that possibility that everything gets real ugly real quick. So don't think that just because we're up here so rapid that it's a guarantee that we're going to stay here or go higher. Always have that humble approach, you know, to the market and to your analysis. Like, start fresh every day. You look at something, try to leave the bias at the door, you know. Having said that, like, you know, just make sure that your fail safes, that your protection is in place in case things get ugly, because, you know, what's very much proven on this chart alone, even in just this block of time here, is that things can pivot quite nasty and quite rapidly at any given time. So, you know, especially off the back of like bad news, like FTX collapsed. Look, it only took like 3 days to really get the bloodshed going. Like, it can get ugly fast if the right things happen. I mean, look at how sharp this pivot here. You know, this was complete despair. This was getting kind of scary. And then bang, on a dime, back up. You know, max greed coming in. Fear and greed, like, what a roller coaster. So that's all I'm saying is, like, just be humble to the fact that these really nasty rips in direction can happen, and you need to have an exit strategy. You need to be able to pull the pin or pull the plug when necessary on any given trade. So, but hey, look. With all that said, it's looking good. It's looking optimistic. The fact that we're over this psychological high here is an awesome thing. We were dealing with a double top. Double tops are pretty serious, especially when they're this significant, like on this kind of time frame. Like, you could even see it on the weekly, even probably the monthly. That looks like a pretty nasty, or not as much the monthly. It looks better on the weekly, but yeah, that's a pretty significant double top there. But we've dealt with that. We've since dealt with that, so very good. And let's just see what this week throws at us. You know, be open to all possibilities, really. But look, I'm not quietly optimistic. I'm kind of loud about it, but I am optimistic about what's coming this week. I think that a 25 basis point hike isn't going to cause a shit show. I don't think it's going to cause like a crash. I think it's kind of expected. And if the market is expecting a 25 basis point hike, then I don't think there's fear on the streets right now, at least for Bitcoin. Now the other outcome would be a pause, right? And I think a rate pause, at least with the stock market, I believe rate pauses are a bullish thing. Let me go back to the index here. This is the Bitcoin index, and we can actually put the interest rate on top of it, like this, if it'll do it for me. Not working. Oh, because I'm on the 1 minute. Let me go like to the hourly and try again. What's it saying here? Study error. There we go. Okay. Let me go logarithmic. Okay, when's the last time we had a rise and then a pause to the interest rates? Right here. So we can see the orange line is the interest rate, right? This was the last time we had a hike cycle. So we were hiking during a bull market. The interest rate was hiking during a bull market. So you can't really say that a hike causes a bear market, because crypto and Bitcoin was just, it was bull trending anyway. Like, so it didn't care that the interest rate was going up. It hit a top though. And was there anything correlated? No, not really. Let's see. There was a pause here. There was a pause to the interest rate. There was a pause back here too. But you can see here there was a long pause right here. This is where the interest rate was terminal. This was the terminal interest rate at the time, being 2.5%, which is nothing compared to where we're at now. We're currently at 4.75% interest rate, but this is where the pause happened, and then the cut started, and that is exactly when Bitcoin started to downtrend, right at the cut. Interest rate cut. There was a very sharp cut here, taking us all the way down to 0.25% interest rate, and that caused a crash along with every other market. Crashed out. So it's historically it's sort of known that when there is a rate cut, the markets tend to crash. So we haven't even started a pause yet. So I think there is still some further good times ahead. We've been having good times for 3 months now, arguably. But yeah, check it out. So pause happened there. Bitcoin was still in the midst of its crypto winter at that stage. So I'm just trying to see, like, was there any kind of relation from an interest rate perspective between this part of the cycle for Bitcoin and this part? And I'd say no, they're very different. I mean, we've started climbing already off the back of like hiking. Like we're still hiking, we're still interest rate hiking, and Bitcoin has been climbing since January, 1st of January. So yeah, maybe there is no tight correlation or reasoning behind the interest rates and Bitcoin's price. All we sort of know is that at least when there's a cut, that tends to follow with a crash. Interest rate cut, then a crash. Is there any other examples? No, I think the bulk of, can you see here, the bulk of Bitcoin's existence was at basically 0% interest rates. You know, these were the good times between 2009 and like say 2015 or 2016. Those were the good times. It was 0.25 at most interest rates. So low interest rate environment, perfect storm for Bitcoin to be able to, you know, get off the ground. Lots of money flowing around. This was the first like sort of interest rate hike that it went through. Kind of like an inverse correlation here. There's like a dip and a rip. There's a rip and a dip on the interest rate. So yeah, let's see what we get. Let's see what we get. I'm gonna delete that now. Now, something I was going to look at was any kind of chart pattern. So if we go back to the hourly, I think the pattern that we've just come out of was some kind of bull flag. And I'll show you what I mean. Something like this, like that. And if we just take the section like this, that is pretty much a bull flag, you know. Price trends up into it, creating a flagpole. A downward channel of consolidation, which is the flag, and then a breakout. Now, what's happening right this second? Like, what are we getting in the last little bit of price action? Let's go down to the 5 minute and see if we can find any kind of patterns. I can certainly see there's trend on top and there's trend down the bottom. So if we take the extremes, we're dealing with something like that. If you take a wick, you know, the wick extremes on the top side, and if we get that and just change it to a resistance, We've got a bit of a resistance trend line here. And then we've got a bit of a support trend line down here, like that. And the fun thing that you can do is zoom out and look back and see if there's any kind of activity off that. Ooh, look at that one. Look at this, okay. Look at that sharp activity of it there, that line. And then it dancing on it like there. And a bit of, not quite, but like some post action after that. But yeah, it is interesting how like you can sort of find areas where price reacts to certain lines. Let's go out to like say the 15-minute chart and see if there's any kind of interesting action. Kind of like where that dropped to, that whatever drop that was. Yeah, curious. Interesting. But yeah, that's kind of like what I see happening right now. It is in some kind of squeeze. We've had a high, we've set in a low, we've had a lower high, a higher low. Do we get a lower high again and then a higher low again? Or do we break out of whatever this is? We're squeezing down into something. We're dancing around 28,000. We're currently at 28,100. Yeah. This is only a short time frame. But yeah, we're definitely coiling into something. And if you want the textbook bias here, the technical analysis textbooks say that we are in an uptrend, so the expected move out of this consolidation is up. You know, that's textbook. What would go against textbook would be a failure and then like some kind of like retracement. But because we've entered this, whatever this is, from an uptrend, a strong uptrend, the trend is your friend until the end. Has the trend ended yet? No, there is no evidence of the trend ended or ending. So that's what you get. Hey, we got 30 people in here. What is up, guys? Smash up the like button if you haven't already. Subscribe to the channel if you haven't. Peak viewers so far was 31. We're looking good. We grab those oscillators back again. Let's turn on some different indicators. Divergence indicator, which is basically an RSI, and stochastic RSI. So a nice peel back here, like a resetting of the stochastic RSI on the 1 hour chart. We hit like an oversold sort of area, sorry, overbought, and we've ducked back below. And we'll see if we can establish some support up high here. We seem to be looking okay. We're definitely above the 200 moving average here, simple moving average on the hourly time frame. Let's check the 4 hour once again. You can see those Bollinger Bands are starting to squeeze back up again, just like they did here. They squeeze up and then you get another pop after it squeezes. What's it doing on the daily perspective? Okay, so we're starting to get back up onto the 200 daily. Like we crushed above it, we found support on it. There was a bit of a fake out. Like this is what I was talking to you about, is like I was starting to get a bit nervous when price fell below 20k. It like did like a dirty retest of 20k. We actually had some action and some activity below the 200 daily, so that was starting to get a little bit concerning. But yeah, we're very much back up on top of things now. Weekly. I mean, now that we're talking about moving averages, let's look at the old moving averages on the daily. Well, let's check the weekly so far. Remember that whole weekly death cross meme that we were dealing with? That happened, and we got 3 red days out of it, or 3 red weeks rather. 3 weeks of retracement after the death cross on the weekly. But look, now we're back up above the the 200 weekly simple moving average. That's awesome. That's a good start. That's bullish information to us as analysts, right? Because it is the trend that Bitcoin has been using as support in its entire existence, right? We don't have data that goes back before here, but you can see pretty much it has in the past acted as some kind of launch pad or like bounce point, like a trampoline, right? Price bounces off this yellow line, which is the 200 weekly simple moving average, and rallies up off it. So this was a first. To spend this much time below it, that was a first. And it's, at least now we know, we've got some history behind Bitcoin now to say this is what happens in a recession. This is what happens to Bitcoin when the interest rates are doing this, or when inflation is out of control, or when we go below the 200 weekly moving average. That's all it needs. It just needs time to show how it behaves in certain environments. And I'll tell you what, it's held up pretty well. Bitcoin has held up through this storm. The shit show that was 2022, it threw a lot at us, and here we are back at $28,000 already, Q1 2023. So, basically, you can be a doubter. You can be a bear at your own peril. You can basically, you can say, oh, there's never going to be another all-time high. We're never going back to 69,000. That's crazy. Like, that was just some anomalous, like, perfect storm. I've heard that like a couple of different people have said that we're not going back to 69,000 within the next couple of years, because it's that environment, what COVID produced, like, the crazy Fed printing, like, to that I say bullshit. The trend has proven otherwise. Like, we are on this trajectory, even after all of the craziness of last year. We're back up on top of that 200 moving average, and we're looking at 30,000 basically. We're knocking on the door already. So there you go. I'm still optimistic. Let's see what the week throws at us. I'm sort of just rambling now. I've run out of steam. Let me just sort of click around and see if there's anything else that's like significant to talk about here. But I'll probably wrap the stream up shortly. It is the Monday candle, guys. We are in the Monday. Not to mention this, we're still waiting on the US stock market to open as well. So that's like another thing that we have to wait for. It's kind of like this like limbo. Now, something that would be moving by now though is the futures market, the S&P 500. So we got a little bit of action. Last week was kind of, it was up, but we had to fight for it with the S&P 500. Like, look at this. If we take, let's see these days here. No worries, petrol head. You're welcome. So here's basically last week was inside this. So basically, yeah, there was an uptrend, but it was quite flat. Like, there wasn't, like, the highs weren't significantly higher, and the lows were only just sort of, gradually climbing, getting higher. So nothing too crazy out of the stock market. Let's see how Monday is handled by the stock market. We've got a couple of pretty big lines that we have to look at, and that is the descending trend line that came from the all-time high of the S&P 500. This has been a very dirty retest of that trend line. Bitcoin had a much cleaner retest of its downtrend line on the logarithmic scale, at least. So from a logarithmic perspective, we're underneath it. We're back underneath it, which is kind of scary. You know, we've had a bit of activity above it here and here, but the recent action has shoved us back below, and now we're fighting to see if we can get back up on top of it, at least from a logarithmic view, right? We lost this trend line, this white line here. I mean, we were in a huge ascending, like a rising wedge, and textbook says, yep, we fell out the bottom of it, so that's what we got. You know, classic play. And by the way, the stock market, the stock market tends to follow the textbooks a lot closer than crypto does. And I think that's because a lot of these, a lot of the textbooks were written with the stock market in mind. I mean, that's the original markets that technical analysis was born out of anyway. So it's no surprise that it works really well for the stock market when you get these patterns. So, but anyway, that's the rising wedge that I was looking at. I'm gonna just reduce the line size of that a little bit, because I think this is now important again, this line. Now that we're looking at it. So yeah, let's see what next week or this week brings for the stock market. That's the S&P. This is the NASDAQ. I think the NASDAQ chart looks a little healthier than the S&P 500 maybe. Hard to say. Yeah, it does. Okay. So with the S&P 500, we've almost come back down to these lows here. So it's almost considered double bottom, whereas with the NASDAQ, it's still very much a higher low. See there? So we came down into that low, come up, resistance, higher low, bounce. So we're in progress of this, whatever this is. If it's going to be a bounce to a new high, then awesome, like a higher high than this one, cool. If not, you know, maybe it's coiling up to something that we don't know yet, but we'll see. The whole bank failure scenario and narrative that's being pushed at the moment and that is unfolding, you know, it's real, obviously, but yeah, let's see what it does to the markets, to the stock market, and even crypto. Like, you know, it could be a positive thing, and it has been a positive thing for crypto, seemingly, right? These fiat banks, like these traditional banks, collapsing and, you know, having to file for bankruptcy. Anyway, bit of pullback action. Let's get those price levels back. I just want to see what's happening. So there's 28,000, that white line or gray line. We're ducking below it at the moment. Let's see what it brings. Maybe we come back and retest 27. Or like I said earlier, 26. But these were those boundaries that I was talking about earlier. So we're really going to be coming up and testing, see if this short-term boundary holds or not. I guess, yeah, like, at any moment, like, never get too comfortable with what you think is happening. Especially in crypto, like, never get comfortable. You know, there's always a chance that you can be wrong at every turn. all we're doing is playing with different, like varying degrees of probability. So just keep your wits about you. It's a tech demo. I'm actually jobless. Someone could pay me and I'll make dedicated pairs and do maintenance. Shameless shill. No. So let me just see what my schedule's like this week to figure out if I can, like, which days I might be able to stream. Some days I do work mornings, which means I can't do the regular stream time. So today's the 20th, tomorrow's the 21st. Okay. I'm not doing a morning shift tomorrow, I'm doing an afternoon shift, so that means I can stream tomorrow. So here's hoping, well, with all things going normally, I should be streaming tomorrow, similar time. We'll have a lot more to talk about after and seeing how like the Monday performance went, and let's take it from there. But otherwise, stay safe, guys. Thanks for checking the stream out. I know it's been a few days since the previous one, and yeah, I'll catch you tomorrow. All right, take care. Bye.